Every weekday, the CNBC Investing Club with Jim Cramer holds a morning meeting live stream at 10:20 a.m. ET. Here's a recap of Monday's key moments. 1. Markets are starting the week on a higher note Monday, following a strong Friday and a positive week for equities. Monday's advance comes on the heels of White House issuing guidance late Friday evening, exempting smartphones, computers, and other major technological devices from the 125% reciprocal tariffs implemented on imports from China. However, the 20% fentanyl-related tariffs imposed back in February and March are still in play. The news came as a sigh of relief for club stocks Apple and Nvidia. But Jim Cramer said that it's not an opportunity to buy because the industry is not out of the woods yet. The Trump administration has said it is planning sector-specific tariffs that will include those products. Meanwhile, the yield on the 10-year Treasury note has retreated a bit after trading north of 4.5% on Friday. 2. Portfolio stock DuPont was upgraded to an overweight buy rating from sector weight by analysts at KeyBank. The stock has been hit hard due to the U.S.-China trade war, with Beijing launching a questionable investigation into the company over anti-monopoly laws. Analysts at Key view DuPont as a high-quality name that can grow its profitability while carrying a strong balance sheet, which should enable it to withstand potential economic downturns. "I was so glad to see that," Jim said of the upgrade. DuPont, which is in the process of spinning off its large electronics division into a standalone company, could be a beneficiary of some of the tariff relief that we saw over the weekend, said Jeff Marks, director of portfolio analysis for the club. KeyBank's new price target on DuPont is $81 a share. 3. The Federal Trade Commission's antitrust case against club name Meta started on Monday. The trial could result in the parent company of Facebook needing to divest from its other popular social media and messaging platforms, Instagram and WhatsApp. "I think that will go nowhere," said Jim of the trial and those potential remedies. Meanwhile, Morgan Stanley lowered its price target on Amazon to $245 a share from $280. Analysts also lowered their 2026 earnings per share estimates by 10% on the heels of several factors, including the impact of tariffs. Amazon stock is down roughly 16% year-to-date. 4. Stocks covered in Monday's rapid fire at the end of the video were General Motors, Pfizer, and Intel.